Welcome everyone. Let us get going. A lot to go through this week. We've got US jobs, US rate decision, and UK rate decision. So let's have a look at the dollar. Going to keep this nice and short and sweet. End of the month, so hence the reason why I've put the monthly charts on the left. So left to right, you've got monthly, weekly, daily, and this is the dollar index, which is dominated by the euro. I think the euro takes up at least 40% of this index. So we are sitting inside the September range as we head in the final day of this month with a lower close, but the weekly chart, we're just sitting in this 19th September breakup with all the averages underneath us and with the potential for this to sit here and then just push into the highs. So is the monthly telling us something? The fact it's just closing lower, can't push higher? Yeah, possibly. Scenarios: if the Fed only do a 50 basis point rate rise and the Canadians were expected to do 75 basis points, only did 50 pips, was it last week, I think? If the US backpedal, up till now, they've said that they are adamant they won't soften the rate rise cycle until that inflation gets closer to 2%. Inflation is just flying at the moment across the developed world. So you would think that based on what they've said, the Fed would commit to a 75 basis point rate rise and take us into 4.5% into the year end. If that's the case, then expect this dollar weekly chart, although it's got a lot more red and it's come off this extension, it's not going to take much to get up to those highs and beyond. And all we're doing is a bullish consolidation, because all we're doing is waiting until the averages catch up. That's a typical consolidation pattern. You break up, you dip, see some profit taking, consolidate, averages catch up, you break up, you profit take, you go sideways, averages catch up, you break, etc. So all we're doing here at the moment is coming back in to reconnect with the 20-day average. It's a huge trend. All these dips got bought, and we could potentially even break these highs in the dollar. Now, if we break these lows and start closing underneath here, that gives relief to not just the US markets, but Europe as well, potentially. Okay, so at the moment we're coming to the underside of this daily trend line. Volume is coming back on these lows and we could break up. But if you look at the Dow, this Dow has been on an incredible bounce on this monthly chart, and we have this major fire line at 33,700, and we are 900 pips underneath that. Why is that a big fire line? Because that was the big main crunch drop in April. We sold into that in May. Well, we were flat, but rejected it in May and then came down here into September. So if we go and kiss that and we can't break through that up to the highs, then we are coming lower. Decent volume. We are just 3 hours off the close of the Dow today, and we are closing right up here, engulfing September's bar. So the market seems to be quite happy at the moment, based and going on that basis, any pullbacks into September's open of 31.4 later in the month, or who knows, maybe even sooner, could see that push back up. But I think this is the one to watch, this 33,600, because if all we do is run back into that grey zone and sell, then we are going to come and find these lower levels. I think the most likely scenario is we'll continue some upside. I think we'll continue into this zone, maybe back end of this year or early next, around about the 35,000 mark. My take on this is that we'll then hit that and then roll over. At that point, we could come and find areas like 25,000 on the Dow. Who knows, maybe even lower. All right, so this is a huge drop, significant rise on the back of this support it's found, but this is at the moment just a three-wave corrective wave. But any push into that trend line resistance and that congestion, I think that could roll over. All right, daily chart. This is a 5-wave move into this November 20 support. We are doing a corrective wave into this resistance area. The corrective wave could take us into, I've got 33,800. That's in line with what I've been talking about. So I mean, we had a huge A wave after this 5-wave drop in the weekly chart. So I would have thought we could come back and find, do a 1,500-1,800 pip drop back, pull back, unless we just continue and break up right into that resistance now. So it's a massive week. The daily chart on this Dow has had a big punch up. The Nasdaq is really trailing. If you look at Facebook and Amazon, they have been absolutely hammered. In fact, let's do that now. Let's look at Facebook. It's annoying. Why is that not finding the stocks? Right, okay, scrap that. I don't know what's going on there. Let's look at Apple. I'll come back to that in a second. So Apple on the weekly chart is coming in this 133, found a lot of support from the June lows. Huge move up on Friday, but all we've done on Friday is slam into a lot of resistance. If you look at this daily chart. So we wound up very nicely into August, lower high, dropped back into the June breakout area. And so a likely scenario here could be assuming we can close high and push through this, is to come into 165, maybe a little bit higher, and then drop back. Trend line. So we hit the trend line on that August high. Now we have a tighter trend line. Bear with me 1 second. Just got to sort something out. Right. Yeah, we've got a huge overhang here in the Apple at 160, 164. Otherwise, yeah, if we break this, is it a significant bar on Friday? So I think the markets are going to remain somewhat jittery until we get at least Wednesday out of the way. I believe we have a press conference. Let's have a look. Yeah, we've got a press conference 30 minutes after the decision. Right, okay, so let's look at what is tradable and what is not tradable. Let's just have a look through. I'm going to just grab some Dow 30 stocks. So we're certainly coming into a lot of support in Microsoft. So we're flat for the month in Microsoft. Look at this left-hand chart. Sitting above the 200-day average on the weekly. And I mean, the earnings season has been overall pretty good, with the exception of Facebook and Amazon and one or two others. But overall, it's been all right. The banks are doing well. Energy stocks energy companies are doing incredibly well. So I think as with any part of an economic cycle, it's about if you're in stocks, it's about being in the right sector, the right stock in the right sector. Nothing unusual about that. That is standard practice for all of you stock traders. At the moment, energy and commodities are good ones to be in. Anything exposed to the retailer, particularly in the UK, is very vulnerable, if not getting crushed. Right, so seeing as most of us in the room are UK traders, let's go into UK stocks. So I talked about miners. Let's talk about some minor stocks. Now, I always look at broker reviews, and broker reviews are suggesting that, let's get my notebook. Broker reviews are suggesting that Hochschild, this one here, can do. Brokers looking for 90p on this one, on recent reviews. At the moment, the volume does not back that up at all. So gold is still suffering under a strong dollar. So be very careful with some of these miners. That there is no reason at all to buy this Hochschild at the moment. By all means, punch type in a question if you have one. All we're doing is pulling back into the late September support. So if we close higher here, it's about a buy signal. Well, did well on the 25th, 26th of October, and then they pulled right back into that support. But the key to this is there is no significant increase in volume on the Hochschild. Sentiment. So we saw a decent move up here in the 20th. So we could well come into 85, 86 on this one. This one I think is better. If you're looking for a good miner, I would be patient. Wait until we get Wednesday out of the way and see if this sentiment can come into 85 and hold. We're only 89 now anyway. You can see on this weekly chart, we punched higher and then closed right back into this range. So it looks as if that one wants to pull back. Sylvania, I would steer clear of that one. If you happen to have got in on the lows, then great. Otherwise, be careful. Pan-African. Now, we've seen decent volume on this one today. I like the weekly chart on this Pan-African. We've been talking about this well. We nearly always have a look at this one, or certainly have done in recent months. Last week saw a really good punch higher in the volume. This 17 looks as if it's getting bought. If we can hold this week, I would expect to get to 18, 19, 20 in the coming weeks. I was going to say quickly, but this one just doesn't seem to move that quickly on the whole. So I'm liking the volume on this Pan-African's not managed to lift the price very much. So that is a very slow, tight range on that one. So be careful. Griffin. Wow. I do not like Griffin at the moment. Very scrappy chart. Volume we seem to get some spike highs in volume followed by incredibly low volume. Griffin is not one for me. Right, if we compare that with a couple of US miners, silver miner CDE it has pushed off at 250, 256 and gone all the way up to 380. Silver is underperforming at the moment. Silver and gold are underperforming as we wait for the Fed decision. So at the short term, this looks as if that could get closer to 300. HL, US gold miner. I think what interests me about this one is the healthy volume. You've seen some healthy volume levels on this one. So I think if this one does pull back to the 4 mark, I think that I would expect that to hold, but no guarantees in trading, as you all know. But if you're going to buy anything in the a gold US miner, that might be one that's well worth looking at on a pullback. Right, let's cut across. Let's stick to the sectors that are doing well. Energy. This Petrofac had a really good, this is an oil services company, it had a really good week last week on volume. You can see from the monthly chart, this 90 is a key level here. So I think this pullback into last week's decent move at 105 is buyable. You may come and see the pound mark. Brokers reckon this is going to 160. 160 would take that into the weekly trend line I've got up there. So it ticks the boxes of support, volume, sector. So it ticks a lot of boxes. So I am in this on pullbacks and looking to see if this can push up. If it really gets going, I can see that going to £2, but 150, 160 is an obvious place to take profits. If it gets to 150, 160, I will have pretty decent profits. So I will get out of that level. Right, let's look at KP Gulfstream. Keystone, Gulf Keystone, isn't it? Yeah. I like the volume, I like the price level. That looks as if that could start to pop above 215. Actually, we might well see 199 again in that one. Last time that punched into 230, that dropped right back. Jury's out on that one. Ever since we had that big punch up on the 3rd of October, this has just drifted lower. Tullow. This Tullow is really shaping up. I think this is probably a better bet. It's a cheaper stock anyway. Much cheaper stock. In terms of using leverage, I think, again, the brokers think Tullow can do, I don't normally talk about brokers, but it's interesting. Tullow take what brokers say as red. I just use it as one of my many scan tools, because if brokers are highlighting quite a nice profit level on these stocks, it tends to just drag more traders in. That's the only reason why I look at the brokers' reviews. In the meantime, I would only ever take a trade on the back of my analysis, not broker numbers. So brokers think this one can do at least 80. 55 would take us back to the top of that resistance, and 60 is the main resistance overhang with this one. You can see it's really struggled with that trend line, but it's got a huge amount of support down here. So I think that ticks enough boxes for me. I'm not overall impressed, but it ticks enough boxes for me to want to hold that and see if that can get at least into 50 plus. If you're not in it, there's still plenty of time. You might see 38, 39 on that one. You need to stop at least under 35. But the daily chart, the volume, the weekly chart does, for me, that ticks enough boxes to want to get in that and trade that. Right, Andy's square, it's pulled right back. But it's a lot of traders are coming on that. That was 438 not so long ago. Here we are down the £3 mark, right into a lot of support on volume. Look at this monthly chart. This is why I like looking at the monthlies at the end of the month, because it's sitting so high. And we're about to close underneath the last 2 months levels. So, you know what, having seen that monthly chart and looked at that big drop into this £3, I would back off and see if you can get some lower numbers on that. That looks as if that might well have, that's a, 3 lower closes in the weekly chart there. I would not touch that until I get more confirmation on the buy side. Right, let's have a quick look at the big boys. BP sitting up on volume. Any pullback to 450 is buyable, in my view. Shell had a good run. Seeing some profit taking at the resistance, so you might want to back off of that one. iGas is something I have been tracking, but these guys are into fracking. They're gas explorers, but they're into fracking. So the UK ban on fracking has really seen this one come right off the boil. So I would back off until that situation changes on iGas. Any stocks you want me to look at? Right, I'll come out of energy and I will now look at a completely different sector. I'm going to look at UK retail. We've got an update on Shoe Zone. Right, now Shoe Zone is a bear raid opportunity for me. I've been short this for a few weeks and looking for this to really lose its footing. You can see from the markings, I'm looking for a possible gap fill at 89. Huge drop on the 22nd of August. And I'm looking for a repeat of this pattern. Yeah, so we do a 1, 2, 3 wave drop into 94 here back in 2019. We do a 1, 2, 3 corrective wave into the drop zone. There's a boomerang to the drop zone. There's the major drop. It takes a long time to grind back to that sell zone, And then look, 3, 4, 5 days later, you're down there at 32. That's why I like bear rating stocks like this. So if this there's a potential head and shoulder, all sorts of patterns. The main thing is just the resistance. That's all I'm interested in, the resistance. Lack of volume, major resistance, prior drop there in July. It's taken a long time to claw back, as we did here. I'm happy to sit in a short here and then see if this can play out. We can. I love gap trading, so I would fully expect that to go to 89, but I don't know that for certain. So I am trading it, and will ex-dividend on the 3rd of November. Right. I think it's a weak stock. It's a bricks and mortar. I've been bear rating bricks and mortar for, oh, how long? Let me see. What? Quite some years. 07, 08 plus. I think even before 07, 08, bricks and mortar stocks were great bear rater targets. Right, let's have a look at a couple of airlines. Let's get a feel for what the markets are doing now. And the monthly chart in the British Airways, IAG, is pulling up. EasyJet. I'm looking now at the... Come on, why are you not change? So all we've done here on the weekly chart is reconnect with 20-day average. That's why I don't trade these stocks. I don't want too much exposure, if any exposure, to the retail sector. Right, and let's look at Primark. Yeah, so all these guys are coming off the lows. Volume we've had some decent, a few good weeks off the lows on this Associated British Foods, i.e. Primark, but not great. Sainsbury's, it's only recovering to resistance. Looks as if that's capable of doing £2, at which point £2, 2.10 is a major file line resistance. So we're getting close to that. Tesco, recovering, not great. Okay, let's look at Boo. I mean, this is shocking. This is, yeah, this stock was £4.33 not so long ago. Here we are on 50p, and as seen on screen, ASOS, wow, horrendous, completely flat for the month, horrendous. Yeah, not that long ago, that was 60, 70 quid. Here we are at £5.50. DFS. Yeah, these are all, some like DFS, I'll tell you what, I think DFS is a bear rate opportunity. Let's have a look. Let's go right from that to 87 to 88. Once the move's begun, it's harder to get into these. So January this year was a great one, as it was coming underneath that resistance at 247. I would look, if I wanted to short this, I would look for, try and look for 150, 165. Any bounce into that area there, I would short. But yeah, this is it's fallen right to a key area of support. So, right, I'm talking too much. Let's move on. The works. You are interested in reviewing the works as a buy. Right, this is another one I don't particularly like as a business model. What's the ticker for this? Are you giving it to me? WRKS. That would help if I read what you typed in, wouldn't it? WKRS. Right, okay, can't find it. It must be on here. Oh, it's got it. Got it. WRKS, yeah. I do not like it. I freely admit that's had, as with a few stocks like this, a good few weeks of reasonable volume. It's not for me. Don't like the sector, don't like the company, don't like the stock. Okay, I'll go to its most recent low. All that's done is go into resistance. All that's done is knock into 36, 37 resistance. I think the volume is pathetic. Even when, look, we had a decent spike in volume on this one, and it's still, where are we? Well, I say a spike. We had a reasonable amount of volume, just went into that sell bar and pull back. I mean, technically, I wouldn't buy it for those reasons. Well, it's a big push up here on the 23rd September, isn't it? And we're still in that range, but not for me. Let's look at basic materials. I'm going to go through these quickly. Gem diamonds. That's actually a daily, technically that's a buy signal on the daily. New low on Friday, complete engulf today, on volume, on support. But you know, as you can see from the huge drop on the red on that chart, it's a risk. Everything's a risk, but that is a higher risk. Glencore sitting up really nicely above all the averages. Everything's above the averages. If this can hold £5, I can see that going to 570. This most recent pullback at 480 appears to got bought. That looks as if that could break out. Nice ball flag in the weekly. If you're interested, I would just try and buy 470, 480. See if you can catch a bad day and buy a pullback. Man Group. Now I'm liking these. This is on the right side of the structure. Cleaner charts, cleaner support. It's not all good news because on the weekly chart, we are underneath the 50 and the 200-day average. But this has been on a good, if you just look at the daily alone for a second, this is a breakout area from the 16th of March. So if we can hold this 217, they're commodity brokers. So I'm liking it. I'm bullish anything to do with commodities. I'm bearish anything to do with the consumer for obvious reasons because of the war and supply issues. So I think I think this is a good pullback. It's a boomerang to the March breakout area, and when we did we went from this 212 to 270 last time round. So I'm liking Man Group, TP, ICAP. Well, this has been on even a better run. I'm going to have to wait for a decent pullback on that one. That's too high for me. Fresnel, I don't know why that miner is here. That's got Russian exposure, isn't it? From my memory. Rio. Ooh, that's interesting. Rio has pulled back. Rio's having a tough time. I would wait for a deep. Wow, there's got huge support of 43.90. That looks capable of pulling back into that 43.90 to me. I think that's I've been in and out of this a few times on the way up to that 59.50. I didn't get the whole 59.50. I took it off at this 55. I'm getting interested in that one, but I want a further drop, and it may even come back to 41.70. I'm interested. Right, enough of that. I'm going to really whiz through the last lot now. Barclays, financial sector. Come on. Look at that monthly sitting on that average. If I can peel back close to 140, I would trade that. Otherwise, I'd back off. Prudential got hit. That's not tradable at the moment. DLG, this is direct line, isn't it? Now, it's had a good month, been beaten up. Trend line resistance overhang. I would wait for that to go back to close to 185, 187. If that breaks up from here, I will reevaluate that. But I would rather sit back and wait for that to pull back. Now, again, the brokers reckon that's going to 266. So this is interesting where the brokers have said, I think this week or last week, can't remember which broker it was. I normally only take account of Barclays and Cazenove, etc. You know, I'm not, just because the brokers think this is going to 266, I am not diving into this. I would, however, buy that if that can trip back and find support. So that's on my watch list. It's not on. I'm not diving into it. AJ Bell. That's too expensive at the moment. Hit resistance. Any pullback to 277. Sabre Insurance. Nope, not interested. I didn't look at Lloyds Bank. I like Lloyds Bank. I think it might even be worth. Well, if you see, 40 is the obvious place to get in. If you're interested, bid on 40. Get your stop under 38. Let's see. Why do I like it? Volume, support, higher close on the monthly, and it's the risk-reward ratio is good. So I like that one. Right, quick couple of whiz through a few other things and I'm off. Retail we looked at, housing, so Barrett Developments. Yuck. That's just recovered into resistance, no more. I would even consider, if that got to 440, 450, I would even consider shorting that one. I'm so bearish on the housing. Persimmon, yuck. This is a big divvy player that has had a horrendous year. It's a higher close in the monthly, so on major support. So there are some reasons to buy that, but not for me. Let's look at defense. No, I'm not going to look at that right now. Metals. polymetal, yuck. SCX in the US. Look at the volume in this stock. It's been very gappy. Volume, a big spike here on the 21st. This is a big copper miner, and there is an issue with copper. So when you pull back into 28.90, I would buy that. Right. Any other stocks you want to look at? Because I am coming to the end of my run here. Services, nope. Let's go back to my list. Yeah, got a couple of things I want to look at. I need to backtrack into oil because I want to look at hunting. This one came up this morning. Yeah. This could break. Good sector. So we've seen 250 today, and that's closed at 268. I think that could, if that breaks out of that pattern, that's going to go. And we look as if we could recover, but we might even recover to 350. If I pinch back on that one, obviously it's at a major resistance area. But the volumes are picking up, the closes are significant. So what we've done is pull back. We had this big push on the 25th of August. So we've been in that area for most of the time, apart from this breakup here in September. We've been in this 25th of August bar, all of October. Yeah, we spent the whole of October in that 1 day's range. I'm regretting not buying that at the 220, 222. That's already been on a decent move. I'm going to have to hope. I'm going to have to see if I can bid on 250 because that is a little rich for me up there at the moment. But hunting is a good one. Right, got one more. Let's just look at techs. Update on IQE. I'm liking this one. We broke out here on the 14th of October. We look as if we can go to 45. See if we can get a dip, a bad hair day to 38p on that one. And speculative seeing machines. That needs to peel back if you're interested in a speculative one. Zoo has run. So I need to pull back on Zoo. Money supermarket. Yeah, this came up on a broker listing as well. Brokers reckon it 240. I agree with them. Okay. Oops. I think that's got potential. I think Money Supermarket can pick up from here. It's a flat weekly, flat monthly, sorry. I will wait for a deeper pullback, but I think that one is doable. Right, what else have I got? One more. BYOT. Ooh, that's not what I expected. I thought that one had picked up by now. All right. The brokers reckon this is going to 640. This is why you should ignore brokers. Right, well, I will report back on this one, but this one needs to really shape up. I am not, no, there's no reason to buy that at the moment, but I'll put it on my watch list and see if it does recover. Right, brilliant. I'm off. Thanks for your company. Thanks for your posts, Andy. And if you're not in, I presume you're all in the Zoom Telegram room. If not, drop me a line. Otherwise, I'll update you as the week unfolds, and have a good week. Thanks, everybody. Bye.